Their goal is to reduce your wealth whilst using your tax dollars to bail out a too big to fail industry, which has nothing to do with banking and central systems for government, but a surveillance grid manufacturer. Three things you need to do that worked in 1929, that worked in 2000.com, and that worked in 2008. You have to prepare, you have to get out and get liquid. Then you have to get precious metals. Then you want to have the volatility trade, which is trading the collapse of whatever's the bubble. This is how I'm positioned.
I got word from my sources that some, couple central banks are loading up on physical silver as well because they see what India is doing. Okay, now I can't announce who they are, but it's actually pretty shocking if you know who they are.
You're watching CapitalCosm. My name is Danny. It is November 25th, 2025. But I believe by the time this episode comes out, it comes out on Thanksgiving Day. So happy Thanksgiving for my audience out there. I hope you guys are enjoying the day. We've got a massive treat for you guys. We've got Francis Hunt, the market sniper, as well as Eric Yeung on the show to talk all things gold, silver, metals, markets, anything else in between. Guys, thank you so much for coming on.
Thanks, Danny.
Glad to be back.
Yeah, let's just dive right in here, fellas. I'll start off with you, Eric. Where do you want to take this? What's your general prognosis right now of the metals market? We're kind of in this limbo period, just moving sideways. But do you see any light at the end of the tunnel coming up?
So a lot of people are really afraid of an imminent liquidity crunch. Like we're talking about US dollar liquidity drying up because of the AI bubble or the AI lie blowing up. Francis talks a lot about that, like how it's all fake, right? That AI bubble, how they're making up a lot of the revenues are not even real. It's just left hand to right hand. Anyway, so if that deleverages, a lot of people are afraid that the US dollar liquidity contraction is going to affect gold, silver, and miners. And my take is this: in general, I think that for this particular instance, we are really looking at a race between the US dollar liquidity contracting versus the physical gold and silver availability contracting. So I'm talking about, when I say physical gold and silver liquidity, is the actual available free float physical gold and silver around the world that is ready for delivery, above ground, free float available for delivery.
Mm-hmm.
So if you take that, contraction, because it's obviously, we're having some liquidity issues at the physical gold and silver market, with especially what happened with silver in October at the LBMA and gold earlier this year, right? Okay, so if the physical availability of gold and silver liquidity is contracting faster than the US dollar, liquidity contraction, I believe that, let's say even if there's a fall in price of, gold and silver in terms of US dollars, it's going to be very short and temporary. Just because, the physical is not there, right? So if the physical is not there, in definition, the price should go to infinity. Although we don't go there, right? It's going to go to a price, a lot higher, where people who hold actual gold and physical are going to release it back to the free float. Anyway, so that's my opening right there.
Francis, do you have anything to respond to anything Eric said here? Are you kind of in the same camp as well?
You mentioned something that was really interesting, and I do want to bring that part up. And this ties into understanding the economic templates, getting the correct economic templates of where we are. And if I may, Danny, I'll just share screens. I've got some diagrams
Sure.
that will support on that. So if you can permission me, that would be awesome. But what our core thesis is that this is first a monetary. We are in a monetary event that rather than a general commodity bull market, this is very specifically a monetary bull market. You will potentially get to later a more broad a more broad commodity bull market in due course, because that is part and parcel of a fiat and debt debasement collapse. But initially, we are in the model that is also hyper-stagflation. The hyper bit applies to the stagflation. It's not hyperinflation, it's hyper-stagflation. So it's an extreme version of stagflation. I'll come back to that in a bit. But one of the things I saw that came out, we've been saying since September 2024, we called a breakout on a major oil short and dollar long trade. So that's us over there. That's September 24. That's our YouTube, short oil, long gold. And this is part of the hyper stagnation, stroke stagflation environment that we're in. And you had Goldman Sachs come out and say $40 oil, and JP Morgan come out and say $30 oil. And there's been a ton of people telling you to rotate out of gold, to buy cheap oil stocks, and a lot of other things. You and I are both good friends with Chris, who does a very effective job of buying incredible energy stocks really cheap. Mm-hmm. He'll probably be fine, but the opportunity generally for oil comes later. This is stagnation. So we have a crowding out effect of all the money. You also, just to put on top of that, NVIDIA, the head of honcho, the Kaiser of AI, initially said in about 6 weeks ago, AI is a great opportunity, but it's not a systemic risk. Now he's saying, after NVIDIA's recent results, where the CEO of NVIDIA basically said, literally the world would have ended if we didn't meet our EPS. He now says, the Sachs individual, that AI has become such a massive driver. It's 50% of economic growth. We cannot let it collapse, else we go in recession.
That's David Sachs, right?
Say again?
David Sachs?
Yes, that's right. As if recessions are 100% to be avoided, not recognizing that they are actually correctional adjustments for excesses that have occurred. So when you do the continual, I never have a headache, give me a painkiller, give me a painkiller, what you actually build up is one mega crisis much later for not responding to the feedback mechanisms. But the whole point in terms of all this new news that has been coming out is that we are in a stagnationary environment. There is crowding out of capital that has gone into a very specific space, which is the surveillance grid over the citizenry. And what is actually happening is cost of livings and affordability is terrible. And the only way they keep a semi-lid on inflation, even though they are lying to you about CPI immensely, is oil gets totally throttled right down. And we had an inverted head and shoulder that triggered in September, hence this call that we made over here. And the monetary crisis sees we have asset bubbles, sees a higher allocation, capital rotation into the gold epoch, which is where we are. We're in the era of gold because everything is fiat and debt bubble. The only bubble is fiat and debt. Gold isn't the bubble. Gold is the response to the bubble. It's the temperature reading telling you it's getting hot in here with garbage. And gold is therefore the thing you hold, and the throttling of the economy, the hyper stagnation for the Main Street and the rest, the twisted balloon economy, where the bulk of the people live in the one half, which is being bled out of air, and all the air is being put into the statist meta oracle circle jerk of fraud that has been going on. And now they're saying, this has become too big to fail, almost as if it's a banking system. So they're making your future digital prison now so essential and protected that it's almost as if it's a core service like banking services. Meanwhile, it is nothing but something that is failing yet to get meaningful traction and revenues attached to it, that they're in a hurry to build out because they're in a hurry to lock us all into the surveillance grid. And your only freedom is actually the physical that you can hold in your hand, not digital. And this is why, as I say, do your shoulder presses with your 100-ounce bar in each hand and get silver and gold. This is where we're at. We're hyper stagflation. Stubbornly high inflation, very, very bad living standards for the man in the street, and a privileged class that is building out with a bottomless overdraft courtesy of state. Let me hand back to you.
Yeah, it sounds like this short oil, long gold trade would even benefit the mining stocks even more so, because of course oil is a key component in the input cost side of things when it comes to the mining stocks. Eric, I want to ask this question to you. What's your current prognosis on the mining stocks at the moment? Because the mining stocks have doubled in price over the last year, whereas gold has only gone up, 50 some odd percentage points. Are they in corrective territory, or would you position right now in physical versus physical versus equities at this time?
The thing with me is that I'm pretty well balanced in terms of physical metals and miners. And I always tell my audience that with miners, you really have to look at a 200-day moving average of the cost of gold and or the price of gold and silver, because the way that the mining business works is they don't look at like a snapshot in time. Like today it peaks out, let's say at like, I don't know, five. I'm just hypothetically speaking, right? Let's say tomorrow the gold price is $5,000, but it only stays there for 2 days, and then it drops back to 4,300, let's say, or 4,000. So that's not a long enough time for the miners to benefit from that, right? So you have to really look at a 200-day moving average of the price of gold and silver to actually see what the miners are selling their products for, which is the physical gold and silver. And as we move forward, as you guys probably know, the 200-day moving average of both gold and silver are moving up because we corrected, for example, gold from approximately 4,400, and now we're pushing almost to 4,200. So we went down to testing 4,000. We are back up to 4,150 or something like that, right? And we almost at $4,200. So the 200-day moving average is moving up the longer we stay at this range. And it's the same with silver. I mean, silver, we almost back to all-time highs. We're about 50. So to answer your question, Danny, I think, right now, if you ask me, miners, you probably get the most leverage off miners right now. If you buy the ones that really corrected like deep and the most. But I always tell people, if you don't own any physical, go buy gold and silver first, the physical gold and silver, and then start building your mining portfolio.
Understood. I want to also talk about a post you just recently posted, and this is kind of ducktails on what Francis was just alluding to. If you don't mind reading these various signs that you've outlined here, and walk us through the significance of what's going on.
So yeah, this really, like you said, ties in well with what Francis just said. What I've noticed recently is that the U.S. establishment, maybe they're intentional or it's unintentional, I don't know, but I see that they are really starting. It feels like they're starting to give up on that traditional milkshake mechanism that they utilized. Okay, on especially the BRICS countries or the global South countries. So there's some signs that I identified. For example, number one is, like, as I wrote, Larry Summers, as I call him, the master US dollar milkshake vampire, because he was the first one who really talked about, how the euro dollar contraction, the economic hitman, the US being the economic hitman, would suck liquidity of foreign countries to back into the US to enrich, domestic US, and at the same time to essentially rob these foreign countries of their wealth. So I noticed that Larry, uh, I guess unfortunately for him, has been named in the Epstein files. I'm not going to go into the details, but essentially the guy just stepped out of the spotlight and he's disgraced. Okay, so in my opinion, there are no coincidences in this world, and something must have changed inside the administration or in the deep state that basically told them to hang this guy out to dry. The master milkshake, US dollar milkshake vampire. Number two, I noticed that Brent Johnson, I call him Brent Johnson Milkshake, he's pivoting to the US stable coins backed by US treasuries nonsense, which Francis talked about. So he's really, you know, putting all his chips into that basket right now. He's talk almost every day he's talking about it. So I think that's kind of significant that he's no longer talking about the traditional milkshake mechanism. Rather, he's talking about this stablecoins scheme, which is essentially a scheme to make up for the lack of U.S. Treasury bonds, bills, and notes buying from the global South and the BRICS plus countries. And then the third one, this is a big one. Yesterday,
Mhm.
Tucker Carlson, you guys both know Tucker Carlson, huge in the US, this guy. And now openly supporting the purchasing of gold and silver by regular Americans. As a matter of fact, he urged regular Americans to protect themselves by buying physical gold and silver. So again, I think that's like an indicator because a guy like him who has deep ties with the U.S. Establishment and the deep state wouldn't say something like that unless he got some sort of a go-ahead. And then number four, I noticed that Howard Nutnick, he's the Secretary of Commerce in the Trump administration. I call him the U.S. dollar milkshake fence sitter. He's now recommending to Trump that NVIDIA should resume selling high-end chips to China. So I read that, and also a lot of people who are in the semiconductor industry, noting that that's effectively admitting that the US administration can no longer contain China or stop China with its domestic high-end chips development. So it's like the end of the game, basically. Basically, it's like countdown time until China can develop and potentially compete with NVIDIA. So they want to grab as much cash as possible from China. So anyway, my conclusion is with all the above, I think that, and thanks to my buddy on X, banker Weimer, he coined it the last print. So I basically commented based on all these indicators. I think if I were Donald Trump or the deep state or the US, I would try to milk this, milkshake thing as much as possible. So whoever is willing to buy like US Treasury bonds, bills, and notes, I sell it to them. And I
Oh, I think we lost Eric. Well, let's go ahead and keep going. You and I, Francis. Very elucidating outline and connection of the dots here that Eric has posed. Oh, there he is. Eric, sorry, go ahead.
Yeah. Can you hear me, guys?
Yeah, I can hear you.
Yeah. So I was just saying that my conclusion is that I think they're going to print, like what Francis said, as much as possible to kick the can down the road at this point, because they can no longer contain China, the BRICS, and the global South countries using the traditional milkshake, US dollar milkshake mechanism.
Hey guys, quick pause from the podcast, but this is something I feel is really important to let you in on. Back in 2020, before I even started this channel, I was looking for an edge, a way to find the big opportunities most investors never even hear about. That's when I found Capitalist Exploits Insider. From day one, it felt like I suddenly had my own team of world-class market pros working for me, digging up trades all over the world, doing the deep research, and handing me ideas that had massive asymmetric upside. Stuff that I would never even think about. Since then, my gains with them have blown past the S&P and the NASDAQ, and it's honestly the single best newsletter I've ever subscribed to. And that's not me blowing smoke. That's for real. I've interviewed their publisher, Chris McIntosh, more times than I can count. In fact, my latest conversation with him is linked in the description box down below if you want to check that out, as well as the pinned comment. And every time, I'm reminded why I've stayed a member for years. Right now, they're offering a special $1,000 discount on the Insider subscription, but it's only for CapitalCosm viewers, so you're only going to get it by clicking the link down below in the description box or the pinned comment. You're not going to find this anywhere else. Click the link, lock it in, and start getting the same game-changing research I've been using since 2020. Well, that's an interesting conclusion, because if all roads lead to the big print and all roads lead to AI investments, and that's essentially what David Sachs was alluding to, as you mentioned, Francis, isn't that a bullish sign for, I mean, I'm just trying to play devil's advocate here. Is that a bullish tailwind for energy? Because if they're just going to dump as much energy into this stuff, they're not just going to stop at nuclear power. I mean, these guys are going to start dumping in coal, nat gas, anything they can get their hands on to feed these data centers. Isn't that a bullish sign for energy, though, Francis? And if they are going to print more money, then that's another notch in the cap, or in the belt, let's say.
As I mentioned, in the more final stages, you will get what we consider a traditional commodity inflationary cycle. What you have, though, are two countervailing forces right now. One is stagnation, and one is the stubbornly high inflation. And the manner in which they keep a lid on the inflationary and the CPI number that they do share is they throttle oil and they ensure massive amounts of supply. Don't forget that one of the first industries that were absolutely worldwide captured was the oil industry. We refer to the cost of oil virtually as the Rockefeller tax, in that it's a skimming mechanism. In 2007, when everybody was high on the valuations of their property and was refinancing their house and buying more cars, they could skim a lot more in terms of oil costs, and that's where you got the almost $150 price. The minute we hit 2008, now some will say, well, that was because of demand and supply naturally, but they have a natural throttle over that as well. We had a repo crisis in September, October. They orchestrated a lockdown and they actually ran oil down to zero for that disinflationary effect so that they could validate a $7 trillion print. So this is a controlled industry. The Rothschilds, typically under Royal Dutch Shell, had most of the Middle East sewn up, and the Rockefellers through Exxon, Castrol, Mobil, various brands that always were in a oligopoly, because they were initially a monopoly and they just got broken up into different brands. And so oil, when they need it to be low, will be low. And the fact that you mentioned data centers are going to require all this energy, data centers being big pullers of energy, and shouldn't we all be bullish oil? Again, I refer back to the fact that we will, in due course, because of the scale of fiat and debt debasement, get the broad swell commodity bull run where oil prices will probably go to all-time highs not seen before at all. but that comes much later in the cycle. We need to play the cycle in the chronology that things are occurring, and for that you need to understand the economic template. We are in a stagnatory economic environment, and oil is in every price, and they need to have the high levels of disinflation, as much forces as possible, to cap the inflationary forces for the man in the street, whilst they do this massive crowd out and huge liquidity surge into chips and all things that are driven, that are required for the AI revolution. So what you're getting is less ordering on Amazon, less delivery, less product packaging, all of which is oil. So oil will actually be one of the last, because their goal is to reduce your wealth whilst using your tax dollars to bail out a too big to fail industry, which has nothing to do with banking and central systems for government, but a surveillance grid manufacturer. So the technical setup was an inverted head and shoulders on the gold divided by oil, and it is still in play. It's made its initial target, but it's a cyclical reversal. And I've shown previously with you, Danny, so I won't do it again. I'll refer people to previous videos, how this is a rinse repeat of CV19, 2019 type structure, where they are left with just two things. They have to crush the consumer whilst they are bailing out an industry. Last time it was actually the banks, and they were insisting on the medical intervention. This time it will be the AI complex. And during that period, they are going to ensure there's a very good supply, almost a glut. And let's not fool ourselves. All these sanctions on Russia, there are all forms of intermediaries via Tel Aviv and Israel that are positioning and getting India and everybody else to repackage Russian energy. So there will always be a thick seam of supply at the moment of gas, oil, and everything else. This entire energy strategy is actually a throttling of the relative wealth of Europe, which has lower rates than US in terms of everything. They are paying ridiculously high prices because of political intent to undermine their manufacturing base and everything else. So America runs a deficit to the Euroland and China. And the one getting most damaged is not China, is probably Europe on the base of that. Porsche barely made a profit when it's an incredibly profitable company, because it's actually paying 2.5 times more than other European nations. So Germany specifically is targeted, and that's the spinal column of Europe. So energies are going to come into the play much, much later. It's a monetary metal crisis. The gold is the play, and you stay the playbook with this. That means you focus on gold and silver and platinum for me in this period. And the reference on miners that you asked with regards to Eric's take, it's very beneficial for miners that energy is kept so cheap. Remember, the US needs more commodities and has now suddenly realized they're in a commodity race. China started the race about 2 decades ago, and America's decided that they better get running now. So they also need mining and resource hunting to become more able. Hence, a lot of the weird comments that came out about Greenland, Canada, and focusing on Latin America as well, the Americas generally. This is all about securing commodities. You've got ships off Venezuela, et cetera, et cetera. That's going to be more of a glut supply. There's already US oil companies, if they do a full invasion, that will be ready to ensure that there's an absolute glut of flow. Venezuela has more proven reserves than the Middle East, largely. It's absolutely vast. So everything is telling me, don't be early into the oil space. There's a lot of people buy cheap oil stocks. Mining is going to benefit from a recession on their costs and an absolute parabola on their top line. However, I will just make this other point. Stock traders are far more liquid than people that actually have blocks of precious metal in their hand. It's a mission for me to sell this. If we get the demand-destroying event let's say an AI tech bust that sees everything contract, people will sell stocks. So miners could fall more due to their liquidity and immediate attachment to bank accounts. People that stack metals, it's a bigger job to load them up, go get them rescanned, cash them in. That doesn't mean it doesn't happen, but I would imagine miners will correct worse initially. Not because they should. They should actually be the biggest alpha runners. So you've got to be careful how you allocate. At the bottom of a dip, when you know we're in a crisis, and even the main papers, not the financial sections, are talking about economic collapse, like you had with CV19 and everything going there. That's the time you load up on your miners. Your gold and silver will drop less if they drop at all. And I don't think it will be for long. And the central banks will be wailing in there rather than buying mining stocks. But the mining stocks will outperform. So you want to time how you do this. There's three, and I'm talking for a bit, so I'll make this very short. There's three things you need to do that worked in 1929, that worked in 2000.com, and that worked in 2008. You have to prepare, you have to get out and get liquid. Then you have to get precious metals. Then you want to have the volatility trade, which is trading the collapse of whatever's the bubble. This is how I'm positioned. So Warren Buffett sitting on billions in cash. That's part of the indications of someone who's getting out of the bubble and getting liquid. He's probably, you'll find out later, got probably gold or GLD or SLV. I don't know his levels of disclosure, but it would surprise me if he doesn't have exposure there. Then you can also position in some miners, but I would say I already have because I don't want to miss out on them. But you would have an opportunity at the bottom to get any dip sell-offs. I would add to precious metals before I'd add to miners. The final leg, the third, the volatility play where you make your money, the big short. Michael Burry did this in 2008, is you have puts on the likes of, and this is what I have, MicroStrategy, Palantir, CoreWeave, Oracle, various others like that are part of a circle jerk of excessive finance. The profits coming out of those puts, and I take a long-term view, I'm like January 28 on all of those puts. If it hasn't happened then, I accept I'm wrong. That money's gone. Whatever profits I do make, if I be so fortunate, that goes back into miners. I already have miners, but that's going to be my supercharge of miners on the dip, because I think a lot of weak hands are going to be forced sellers in what will be a massive corrective cycle that will perpetuate pain on the man in the street, even though you haven't had the upside. So that's my model for how we navigate this period.
Right. But if you have people like David Sachs and the administration looking at the AI space as a means of national security, and they can't allow these stocks to tank because a huge chunk of the GDP is just based on AI investment.
So they will allow the stocks to tank because they want to pick them all up at the bottom when there's no other resource buyers. They don't own them outright. So they're very good at pump and dumps. And that's why we're even getting the information that is leaking. If they absolutely didn't want it, they would be suppressing all the information like they did on the health matter of 2019. I'd have more strikes on my YouTube channel by now. So the fact that we're hearing this is because I think Michael Burry, as an example, is probably a purveyor of truth rather than one of the many echo repeater stations we hear with all these Bitcoin and JP Morgan fake narratives about how there's this big fight going on. There's a lot of manufactured narratives where you get Max Kaiser and Jack Mahlers all saying, yeah, there's a war on, they're trying to shake us out. Well, let's all go short JPM and buy Bitcoin to squeeze them out. They're trying to steal the silver squeeze narrative for Bitcoin. So there's a lot of confusion out there. The key thing is to focus on the big game. They're very good at pump and dumps, and there's always the dump. Don't forget, insider sales, record highs on stocks, all those stocks. Larry Ellison, Elon Musk, Sam Altman, all these guys have divested from their own companies aggressively. The CDSs on the debt are going through the roof. People don't want to hold the debt on this. They're making it a too big to fail asset, but that doesn't mean the bank stocks didn't collapse when we had the too big to fail of 2008. They absolutely did. But what they did is they killed all the private equity holders and they bought the stock back at the lows. They might not go bankrupt, they might not close, but they will correct violently. And that's how they shake you out, because they create so much other financial pressure in your world, you're forced to liquidate assets. You become a forced seller just to pay your rent check or other things. You lose your job. You lose a lot of things. So they destroy the whole economy and they squeeze your testicles all at the same time, and you become a forced seller. And that's how they take the equity back from you. And then when they need capital, they bring people back in at a full price. They run it higher. They create a bubble. Everyone momentum, margin, leverage is long. They flush everybody out, hand them a loss. The goal is to impoverish the citizen and to enrich the insider. Always remember that. That is how they do it. So they will collapse in price, and then the government will come in after the street. They can't miss the opportunity to make the money on the long side, the short side, and then buy it all back at a pittance. They play the whole game every time. That is their greed, and that is their fingerprints and their modus operandi.
Wow. Well, before I get to you, Eric, here really quick, I just want to remind everyone to hit that like and subscribe if you're getting value out of this content. I mean, this is a nuke of information here. So help support the channel. It really does go a long way. Eric, I know you have this data that you sent me today as well, looking at the Shanghai Gold Exchange. But if there's anything that you'd like to respond to what Francis talked about, feel free to do so. If not, then we can go ahead and dig into this Shanghai report. One of the reasons why I like having you on, Eric, for many other reasons too, but you've got a different perspective being in Hong Kong, in closer to China there. So any response you have for Francis? If not, then go ahead and walk us through this Shanghai Gold Exchange report that we're looking at here.
So before I even get into that, I just want to say that Jim Rickers, we all know Jim. He was the CIA's economic consultant back in the day. And Francis know all about Jim Rickers, the CIA guy. Long-term capital management, legal counsel. So the list goes on. Anyway, so he came out yesterday on Steve Bannon's show. He said that he's looking at $20 oil and $27,000 gold. So that, it's almost like he just talked to Francis yesterday, and he's agreeing with what Francis is saying.
Oh, is Francis CIA?
MI6, right?
I'm the earliest. I'm the top of the CIA. I'm telling you the story a year before Rijkaard tells you the story.
And CIA level intel straight from Francis Hunt.
There you go. But I think he's exaggerating it a bit. But the whole point that he's making is that the U.S. deep state is very good at suppressing the price of oil, while at the same time, at this point, the U.S. dollar milkshake in the traditional sense is not going to work. So therefore, to Plan B, which is they will have to allow gold to run, and then potentially try to benefit from that. And I know, Francis and I, we talked about whether or not the U.S. has the 8,133 metric tons of physical gold, and I actually don't believe they have it at this point because of all the feet dragging. It's crazy. You ask Judy Shelton, you ask anybody, they keep just dragging the feet with the answer, in different iterations, right? So I agree with Francis there, but I might add that they're going to do some sort of an audit. It's going to be a dog and pony show. So, and then I think, at the end of the day, if they get Japan and the EU to sign off on it, that's what they're going to deliver to the American public. And most people are just going to say yes to that, unfortunately. For us hardcore, Austrian economics guys, right? So I think let's not write off what Judy Shelton said, which is 2026, July 4th, as a target date for a potential 50-year U.S. Treasury gold bond. So she's implying that basically before that date, there will be some sort of a U.S. Treasury gold revaluation. So what I'm saying is that it potentially will happen, but the actual audit may not be something that me, Francis, yourself, Danny, or people who stack gold and silver would like to see. Now, back to your question. You're asking about the Shanghai Gold Exchange, right? What's going on over there? Put it up. So really, what that shows you, Danny, number one is that the Shanghai Gold Exchange silver price is now again above the LBMA silver price and also the COMEX silver price. The COMEX silver price and the LBMA silver price is at a slight backwardation, okay, which means the futures price at the COMEX is slightly higher than the price at the LBMA. And if you compare the physical, spot price at the Shanghai Gold Exchange versus the spot price at the LBMA, then we got a big backwardation. So what that tells me, Danny, is that it doesn't make any economic sense. Not that it did in the past, because they were almost on parity, right? To ship any silver from Shanghai to the
And,
LBMA.
and just really quick, Eric, you're referring to
Yes.
this. So in the case of silver, 53.22 compared to 53.20. That's a case of slight backwardation there. You don't see that in gold, though. Is that the correct assessment?
Yeah, gold is in the slight, maybe very small discount, and the silver price is at a slight backwardation. As a matter of fact, no, because we're looking at 53.22 for the silver price, the spot silver price at the SGE. But then if you look at the spot silver price at the LBMA, is $51.
Oh, okay.
So it's a $2 and so correct. I'm just correcting what you said. It's a
Right.
$2.22 backwardation. So it's humongous. Nobody in their right mind will ship, a silver from the LBMA, from the SGE to the LBMA for a price arbitrage, right? Because it's more expensive at the SGE. Now, my contacts told me that back in China, told me that in October, when the LBMA had that episode of zero free float, and they basically told India, wait till November to get your silver, that China shipped approximately 50 metric tons of silver to the LBMA, 25 tons of which went directly to India, okay, to LBMA clients. And then the other 25 tons went to London. Now, my sources tell me that that's leased silver. So it's not like they didn't, the Chinese wouldn't sell it to London. They leased it to them. They want because they want the metal back, right? Does it make sense? Because Shanghai, as you look at it right now, right? Like the Shanghai Gold Exchange and Shanghai Futures Exchange silver vault is down to almost 1,300 metric tons of physical silver. So that, a couple of weeks ago, that was 2,000 tons. Now we're at 13 metric tons, 1,300 metric tons. So 1,300. And my estimation is that they probably, realistically, have probably around 700-800 metric tons of actual physical silver free float. So we're really, getting down to the bottom of the barrel, physical silver availability at the LBMA. At the SGE. Now at the LBMA, it's the same thing. It's the same thing. According to David Jensen, whatever silver that the LBMA is getting from the COMEX is basically in and out. They get in, they ship it out to places like China, India. So that's the situation that we're in right now.
Is there any incentive to allow the silver price to rise? And in the case of gold, there is, you can make the argument that, the U.S. Treasury might benefit from a higher gold price should they choose to revalue their current gold holdings. But is there any real incentive to allow the silver price to rise, given how ubiquitous it is in industry and in military equipment and all this other stuff?
You know what, Danny? It really doesn't make any sense for most developed countries to allow the price of silver to rise. That includes China, by the way. China doesn't want, traditionally, didn't want the price of silver to rise. I said it in multiple interviews. So they worked with bullion banks like JP Morgan to suppress the price of silver in the past. So they were part of that LBMA COMEX network to ship silver around to suppress the price of silver. But now that China wants to use physical gold as collateral for their international trade and repo, etc., in place of US Treasury bonds, bills, and notes, what does China need? China needs the cooperation of all its BRICS plus partners and global South partners. And guess what, Danny? A lot of these global South guys, they are major silver producers. They produce a lot of silver. So, in the case of India, they don't particularly produce a lot of silver, but they have a lot of silver. Okay? India has a lot of silver. And India recently announced that they're going to allow citizens to use up to 10 kilograms of the silver that they own as collateral in their banking system to access fiat liquidity. Okay, so India is taking the first step to remonetize physical silver. And then, of course, I got word from my sources that couple central banks are loading up on physical silver as well because they see what India is doing. Okay, now I can't announce who they are, but it's actually pretty shocking if you know who they are. Anyway, so why would these central banks and why would India be interested, like you said, Danny, to remonetize silver? Like I said, the reason is because we are entering into a new system, new monetary system for the global South and the BRICS Plus, where they're going to use physical gold as collateral. But a lot of these global South countries might not have access to a lot of physical gold, but they are primary silver producers. They produce a lot of silver. So what's going to happen is that silver is probably going to be a collateral as well for the global South and the BRICS Plus once they start rolling this out in the next year or so.
Fascinating stuff. Francis, anything else you'd like to add to what Eric just talked about? And I also want to get your thoughts on what role you see the BRICS playing, because it wasn't that long ago you had JD Vance come out and say that or was it Marco Rubio, one of the two, but they basically admitted that we are heading towards a multipolar world, and that would fit nicely into the spot that BRICS is trying to occupy. Where is there? I guess what I'm trying to say is, what's the true nature of this multipolarity? Is it really competitive, or is it, kind of globalist in a hidden way?
It's both for me. So it's a passing of the torch. So it's kind of one is looped, peaking and crashing, and the other one is coming up. They're bypassing each other now, where people will think they're equivalent, but the trajectory, you play the trend. The famous Gretzky quote: "You don't skate to the puck, you skate to where it's going." Where it's going is towards a trust-based system in an environment where trust has been forfeited. So the biggest crisis is actually trust in financial system. And when you look at principles, I always bring it down to principles. Are you a principled person? Is it a principled system? I play the principle, not the man, not the system. Technically, China and Russia are communist nations, and I am anti-communist by nature. But technically, America and the West are supposed to be capitalist nations, but we haven't had true capitalism in decades. So actually, we've been sold a lie on the capitalist. We've got a cacocracy system out of the West. But in the communist nations, they actually, as putting forward an alternative, have actually chosen the principle of high trust. And I will always vote trust. That doesn't make me an anti-American or an anti-European or whatever. That's the alleged principle. If they're going to establish vaults, there's going to be gold. I've already discussed my fantasy system that you could actually gamify trust. I've said China should build vaults with big quadruple thick glass with open visuals, make it a museum of interest for tourists who could walk around at different levels, and you just have gold and silver bars stacked there. And you can drop a dime or a quarter or whatever is the currency of the day, because I doubt we'll have much physical left. And you can choose a number, and the bar will be picked up by a robot arm and put through a scanning system and generate a report. And the population could, as part of the fun, just to see metals move around and the wealth of the nation, actually have this entire gamified environment. That actually has trust. That shows that metal bar, that particular number, and it keeps getting verified, scanned, 4 nines, counted, the inventory, there's a summary, and everyone who pays their whatever number of shekels gets their little note. You check this bar on this date, it was last checked then, and you create that whirlpool of gamification of a nation's wealth, which is open and public to see. And obviously it's high security. And China is moving towards establishing vaults. I would love, as I say, gamify the whole thing of trust. The one thing we don't accept is this whole Fort Knox narrative. I don't, if there is shady, we're going to do the audit. No, well, okay, that goes quiet, all of that. When you see shifty behavior, expect a fraud. You're dealing with known liars, known frauds, and a cacocracy of known thieves. And you're sitting in a system where everyone is stealing and you're the honest poker player at the table. Guess what? You're the mark, you lose. And we as the citizens are in that situation. So if there's somebody who's going to establish vaults across all its primary trading nations with precious metals, and there's going to be some degree of system, and it's offering an alternative, that is where the money will go. I don't have to gamble on that. I can give you high odds that the fake system of the phony capitalists are in decline. And the higher integrity system that falls technically under many communist nations is actually going to ascend. And that's happening. By the way, in other news, Europe established with India a direct payment system outside of the SWIFT. So it's not just driven by the Grand South and the BRICS nations. What you're finding is Europe feels a bit betrayed by America, the whole NATO, whatever things. They're doing their own bilateral infrastructure for payments as well. So it's not a question of does the dollar SWIFT system get undermined. It is currently actively being undermined, and it is the lowest trust system of them all. Don't forget they seized Russia's 300 billion. So if you're not positioning for the collapse and the reduced influence of that system, you're wrong, in my view. And can you say 100%? No, but I'll give you 95 or 99% on that. So that's my take. Position for the new system that has chosen a higher integrity. For now, I'm not a believer on anybody. If it involves government, because the other part of your question is it all at the top level entirely globalist? Yes, it is. At the top level, it is. And I've mentioned the nation that's behind it, who brought communism to all parts of the world, in every place, from behind the curtain. So in the long run, but don't forget, they exist in a host nation, and once they've destroyed it, they move on to another place that they establish health and principles, so they get a nice long runway to rinse, repeat for another generation their strategy. Eventually, they will perpetuate the same crimes they perpetuated in America, elsewhere, on an ongoing basis of extracting the richest from the world until they own it all and you own nothing, because that is their objective. It's not good enough for them to win the game. You need to lose. And that is absolute power. That is when you take UBI, you take medical interventions, and you have a two-tier society where they are supreme and they think they have trended towards godliness, even though they're probably very atheistic themselves. That is, in essence, the supremacy, and it gets into spiritual topics, which I don't have license to muddy your channel up with, but that's where you are. It's a spiritual war, it's a financial war, it's a physical war, it's a freedom war. This is an everything war, and your governments are captured, blackmailed, localized entities that are controlled at the very highest level, and there is a transition of host going on right now, and you're living it. And that's the model, and it's worked very, very well for me.
Wow. Talk about taking us home. Let's go ahead and wrap this up, guys. Eric, before we sign off here, any parting thoughts, anything else that you wanted to talk about that we didn't get into? And if not, go ahead and drop us your socials where people can find you.
So I agree with everything that Francis said, Danny. And to just loop back to when you asked me what people should be doing with gold, silver, and miners. Again, I agree with Francis. I think that, and to reiterate what I just said, if people don't own any gold and silver or miners, okay, they should start dollar cost averaging into physical gold and silver. In terms of the miners, that's something to buy after you own some physical gold and silver, in my opinion. Now, if some people look at the prices of certain names right now and they ask me, they say, Eric, it's a good deal right now. Should I buy some? It's not a bad spot to start a position, but like Francis said, it might drop more if the US dollar liquidity squeeze turns out to be very severe, right? So start a position again, do dollar cost averaging over the next several months to half a year, and that might even work out better, in my opinion. And just to leave this with the audience, if they want to see my work, they want to see more of what I talked about today in writing, they can always visit me on X at King Kong 9888.
Okay. We'll have the link to your X account down below. Thank you so much for coming on, Eric. Francis, same question to you. Anything else you wanted to talk about that we didn't get into? And go ahead and drop us where people can find you as well.
This is a unique period in the economic history of the world. There is a real opportunity, actually, for people, and because it's not all dark and doom. Yes, there's a very dark forces around us, but in actual fact, the what they are bringing about also has knock-on effects, and some of which can be aggressively acted on, that leads to an increase in your personal wealth. Unfortunately, wealth is the only thing that will buy you further freedom and access. I expect to be buying people's carbon credits so that I can continue to travel more as I do currently, who won't be able to, from people who probably won't be able to. As predatory as that sounds, it's the system we're probably going to end up with. And you should want that for your own quality of life too. Maybe travel isn't your thing, but maybe having a large part of land and being able to have access to resources. You don't have to be rich to be happy, but let me tell you, if you're unhappy, it's better to be rich and unhappy and poor than unhappy. So I would say building your wealth is one of the core things you have to do. Protecting and preserving it by exploiting multiple jurisdiction aspects where there will be less draconian totalitarianism and greater opportunity through a combination of foundations, other legal systems, is very important right now. Leaving the West is included in that. And we work on all of these aspects for our community members. And finally, securing that freedom and that wealth so that you can have a liberty, as big a liberty-based existence, where you don't have to think about expenditure too much if there's something you want or need, is what we're all about. There are going to be incredible trades. We're in many of them. There will be real opportunities for timing, and HVF method, our unique aspect that sees us pick key moments for exploiting part of this contagion crash that we have to walk this path, is something we're going to be doing. You can follow the YouTube channel, The Market Sniper, to see how we are implementing HVF method, to get a feel. There's free video series in there. If you click the link, that you can follow, and you'll get a series of small snippets that will hit you up on some of the easy detail to be part of that. We're also on X under The Market Sniper. You can follow us there for commentary on many of the everyday events. Thanks for having me back on. It's a unique time, and we look forward to helping people transition, and this is the only transition you'll ever hear me mention, this economic system to the other in the most sound, safe, wealth-preserving way. And that's our goal for us and everybody we touch.
Yeah. Keynote is HVF, not M2F. Let's just put it that way. So thank you guys so much for coming on. Francis, thank you for coming on. Eric, thank you for coming on. Guys, happy Thanksgiving, especially to our friends over in the United States. Have a great Thanksgiving. Enjoy the holidays. And consider liking and subscribing if you got value out of this podcast. And by doing all the YouTube stuff, you do help in pushing this channel and this video in the algorithm. So much appreciation there, guys. And comment, go Eric, go in the comment section, and or go Francisco in the comment section. Whoever you agreed or disagreed with, let me know. I do read the comments. And then check us out on Substack at capitalcosm.substack.com to get access to all of my stuff early and ad-free and uncensored. And with all that said, I thank you guys for watching. Have a great rest of your day.